Uh, the one other segment in the market and India's solar story, and that's clearly entering its next phase now. The focus, of course, is shifting beyond generation to storage and the entire value chain. And as clean energy transition gathers pace, Waaree Energies is placing its big bet on battery cells to power the next leg of growth. Could energy storage be the missing piece in India's renewable energy journey? I caught up with the CMD, Hitesh Doshi, to try and understand all of this and what's really next for the company in the Waaree 2.0 of that.
Actually, looking to the policies of the country, now we cannot say that the solar panel manufacturing is the manufacturing. You need to have the complete value chain. So if you look to the value chain, we do not have the still enough capacity in the country. For ingot and wafers, now they are coming. And in future, we have to work on the polysilicon. Yes, for the solar panels, there is a capacity now. Unfortunately, setting up the capacity is not that the customer will buy the product for 25 years. So today, anything we buy, even for the personal use, we don't look to the capacity. We look for the services. We look to the performance in the market. And where you are investing for 25 years, there are a lot many other things to be seen by customers. So in the market, it is not important the capacity setup. It is important the capacity available which customer wants to buy and which meets all the criteria's requirement for the quality banking and all that. So this is a big difference today, and that is we believe that it will continue to grow globally.
But you've made this very bold bet on US manufacturing, Mr. Doshi. Waaree has previously said that the group can effectively bypass countervailing duties. Is management still firm on that stance? And specifically, how large is your US exposure today, and what does the US growth runway look like from here?
It's not US. If you look to the globally today, I call it deglobalization during the COVID days. This is continued. Every country wants their own energy. They want the making in their country and the energy security demand after this present situation also that has been constantly increasing. And we understood this well during the COVID, that is the 2023. We made up our mind that it is a time now we have to start the production facilities in US. And almost 18 months back, we started the production in United States. We got a very good response. We started with the two lines, 1.5 gigawatt. Based on the orders, there was opportunity for us to acquire the another unit in the United States. So we acquired the another production facilities. The same time, we started the expansion of our facility, which was started by us. And in next 6 months, we'll cross 4.5 gigawatt plus the facilities in United States. So you can say it was a bold move, but if we get the opportunity where we are seeing there is a market for Waaree, there are the credentials, customers demand. Uh, we have jumped at the right time, and today it has settled very well.
But tell me, what makes Waaree 2.0 different from where the company stands today? And what is the group's plan to move beyond solar panels into end-to-end energy solutions, including inverters, transformers, T&D? And what is the strategic rationale for each of these adjacencies?
Thank you for capturing a 2.0 of Waaree 2.0. And I think you read our presentations recently. We have given in the investors conference. Waaree is moving into the entire energy transition space horizontally. So we started with the solar panel. We came up in the batteries, inverters, transformers. Like that, whatever the products are required, transmissions, these are all the products either we are investing in these companies or we are starting ourselves from the scratch. At the same time, we are going vertically and horizontally. For example, for solar panels, we need solar cells, we need ingot wafers, polysilicon. And when the solar panels are made, we need an infrastructure to put it, we need the grid connections. So vertically and horizontally, we are growing for the last 4 years. So Waaree is moving from a pure solar power play to the complete energy transition business. Unfortunately, the response from the customer is very good because the entire focus is on the same customers, and we are looking to that how we can increase our market share, or you can say our purchase power, what they have for all the products from the Waaree. So keeping the same customers in focus, our nation has moved a lot, a pure play from a solar module to the many other products in this energy transition.
But battery energy storage is still the missing piece, Mr. Doshi. Solar without storage is an incomplete solution. Where exactly is Waaree placing its bets? What margins do you expect in the BSS segment at scale? And what is the realistic timeline to get there?
The BESS has various components. First is like assembling a solar, the battery cells, converting into the pack and putting it to the container, and that is called the BESS. Being a core manufacturing, we thought why not to start with the battery cells, which is the most complicated and captive industry in the entire value chain, and where the large investment technologies, all this required. So we started with that. We started the plan of a 20 gigawatt. Out of that, the phase one, 4 gigawatt solar cell production will start in next 4 to 5 months. And that is a core. After that, we already have the packing, assembly, and containerization plant. So you can say before the end of this calendar year, we'll start offering a complete BSS as a make in India. Same time, our additional 16 gigawatt work we have started. In that, we are going ahead with the additional things like anode, cathode, electrolysis, whatever is required as a raw material to make a solar cells. So right from the raw materials to the final BSS, we'll be able to offer from December and the entire value chain in next 15 to 18 months. So that way you can say it's a large investment because we strongly believe that the solar power has done its work. It has already reached to the 2 rupees 50 paisa to 2 rupees 70 paisa power price with the present interest rate in our country. Now it is a time of the storage. If we can get right to the storage and start offering a long duration storage along with the solar, I think we will not need any other kind of the energy source.
I want to talk about the quarter gone by as well because your EBITDA margins over there have contracted despite top line growth. Walk me through what drove that compression and more importantly, what is the path and timeline for margin recovery as you see it?
As we have informed also in our last year's presentation, we have given the numbers knowing the uncertainty is a part of this business. Recently, we have seen the supply chain issues, increase in the raw material, and the availability issues today on time of the raw materials, which has definitely impacted us in a quarter four. But this was very well thought when we have given our expected numbers starting of the year. So compression in some quarter, it will be there. Some of the quarters, it will be recovered. But normally we plan for the whole year. We don't look to the quarter on quarter because this is a part of this industry where probably when there is a too much rain, the installations will go down. And again, they will recover in the next quarter. So overall, we have given the approximately, you can say our estimation for this year, and we will definitely will be there.
But by when do you see a margin recovery? Would it be in the second half of the fiscal?
I think so. I think so because I hope that uh, these issues of supply chain, the prices of the commodities and energy prices will little bit in the second half of this year should be stabilized. At the same time, the customers are now ready to understand these cost impacts, and customers also giving us the better realization. So it's working on the both the side. So I'm not putting only on the side. Now we are going back to the customer, and customer accepting our request, and the things are changing now.
But you're guiding for approximately 7,500 crores of EBITDA, and that's a good 25% growth that we're talking about. Break it down for our viewers and your investors watching this interview. What, according to you, would be the key drivers or levers for this? Would it be volume? How much is mix? How much depends on margin recovery?
Definitely there will be a volume. That's number one. Number two is we are constantly increasing our production capacity in a solar cells. Our other investments in EPCs, transmissions, batteries, they will also start generating the numbers. So if you look to the capex of close to a 30,000 crore, it is not coming together at a time. Every 6 months, some of the plants are coming to the operationals and revenue starts coming from there, and that will help us to achieve our estimated EBITDA. So it's a mix of volume, mix of the backward integration, starting the production from the new investments. So it's all together. I cannot say it's only one or two items. And this will continue for next few years, since every 6 months or 3 months, new production facility is coming up into the production, and it is helping to increase the top line and bottom line.
To your point, Mr. Doshi, about the committed capex, some have been very critical and flagged off core credit risk. What gives you the confidence on timelines, and what is your target net debt to EBITDA through this cycle?
The projects doing on times are the definitely issues, but if you look to the history of Waaree, uh, the execution has been our key focus. And from a capacity of less than a 30 megawatt, today we are at 28,000 megawatt in the solar panels or solar cells. The way we are executing, of course, there has been a lot of learnings, a lot of challenges, but we are quite confident that we'll start these production lines as a plant. Coming back to the on a date side, we have been again a conservatives. So far, if you look to the balance sheets, our net debts are always very minimal or close to the zero. As a company, we normally keep a target of the ratio of zero point 0.5 to our equity of the debt. And that probably will continue whenever it is required to be choose time to time.
So there's silver prices, Mr. Doshi, there's polysilicon, there's commodity inflation. How exposed are Waaree's margins profile to input cost volatility, and what hedging or backward integration steps are you taking to try and structurally reduce this kind of exposure and vulnerability?
We definitely hedge, like we hedge a silver, we hedge a dollars, but still, like when we are making our estimates, uh, we call internally the old Harvard word called a VUCA. So it's a volatility and uncertainty with the complexities. This is a part of the world we are today, and that we have constantly every day we have to think. 2 days back, a silver price and today's silver price. This makes a different scenario for the production cost of the solar cell today. And this is a part of the business now. We have to make sure every day we are navigating in this and having a proper hedge all the time.